Everyone, welcome back to Mitchell Markets. Today we are going to be taking a look into Amazon and one of my best trades of the year, as well as why and how I've been trading Amazon for the last few months. Amazon's been the worst performing stock in the Magnificent Seven this year, while Nvidia, Meta, Microsoft have all been flying. But here's the thing, fundamentally, that lag makes no sense. So today I'm breaking down exactly why Amazon got left behind and why I decided to buy multiple times before earnings. Let's start with the numbers. As of just before earnings, Amazon was up only 3% year to date. The Magnificent 7 average around 20%. The S&P 500 nearly 15%. Nvidia alone was up almost 40%. That means Amazon lagged its peers by almost 17 points and trailed the best performer by over 35 points. In other words, Amazon wasn't just lagging, it was the clear loser of 2025's tech rally. So why did it fall behind? Two reasons, sentiment and expectations. Investors got hung up on a short-term slowdown in AWS, Amazon's cloud business, and had assumed it had permanently lost momentum. At the same time, everyone was chasing shiny AI names like Nvidia, thinking Amazon wasn't part of that story. Combine that with layoffs, cost cuts, and macro fears about consumer spending, and suddenly the market priced Amazon like a value stock instead of a growth one. But fundamentally, that logic doesn't hold up. AWS still dominates the global cloud market with margins above 25%. Growth has already started accelerating as enterprise spending returns. Amazon is deep in AI infrastructure, running its own infrastructure and training chips. Advertisement segment is now a $50 billion plus business, growing faster than Google or Meta ad units. Retail operations got leaner, and Amazon built a regional logistics network rivaling and FedEx. Free cash flow exploded triple digits year over year, showing the company's efficiency coming back. And it trades at just 22 times, as you can see, forward earnings versus peers like Nvidia, Microsoft at 35 to 45. The fundamentals never broke, only sentiment did slightly. So this right here is a summary of some of the key factors that were going into my Amazon play. Heading into earnings, Wall Street was quietly bullish. Cloud growth was bottoming, AWS had to reaccelerate, advertising revenue climbing 20 to 25% year over year, retail margins at record highs due to automation and delivery upgrades, AI tools like Bedrock Q were gaining enterprise and traction, and after heavy cost cuts and layoffs, analysts expected free cash flow to spike and margins to widen. Add strong Prime Day sales and resilient consumer spending, and you have the perfect setup for a surprise beat. When I see a company with dominant businesses, rising cash flow that's been ignored, that's the opportunity. Amazon was priced like it was broken, but it wasn't. It was just boring compared to some of the other AI hype. So while the market chased the winners, I bought the laggard. Because if Amazon simply catches up to its peers, there's 15 to 30% upside. And since earnings confirmed that turnaround, it rewrote extremely fast. Now we're going to break down the chart's technical analysis after getting the fundamentals explained. So here we are year to date, starting at 222, and before earnings it was trading between 212 and about high 230s. On the 3 month chart, I was buying at my Fibonacci zone 786 of around 217 and 218. I was actually getting in around 218, and I got confirmation being held at the 200 EMA, rising back above 786 support and resistance level, crossing over the 150 and just awaiting a good earnings. I have traded Amazon a few times off the 786 level, like earlier here in August, and was able to profit. So as soon as I see an opportunity and a breakdown to the 786, I was re-entering my position, especially earnings coming up. I was very bullish with Amazon and ended up getting a massive gap up on October 31 and after hours on October 30. Closing out my positions for a very large gain that I'm happy with, and I'm going to wait and look for this gap to be filled slightly, maybe for a half to 3/4 fill, and I may even re-enter Amazon again for another long position. As you can see, a lot of its other gaps have also retraced back down a bit. You can look here back on May 9, May 12. It has retraced this gap about 3/4. So I'm looking for a half to 3/4 gap retracement here to add in to my Amazon position for another good play. I still think at current levels Amazon is about fairly valued but still has room to move, and looking for potentially, in my opinion, 300 in the coming year. And that's why I bought Amazon, not for hype but for mispricing. And if you found this breakdown useful, drop a like, hit subscribe, and comment what stop you think is going to catch up next. And I will see you in the next one with some more plays and opportunity that I see in the market. Hopefully you enjoyed this quick summary of a little of what was going on in my head when I was doing this Amazon position in an easy to understand explanation. Have a great day, guys. See you next time. Mr. Market.